Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Monday, and we're at the 6th of February, 2023. Tomorrow's a huge, huge day. It's rare that you get the Fed chair speaking back-to-back on national television, but it's about to happen. Tomorrow at 11:30 a.m. Central Time on Bloomberg, you will see David Rubenstein interview Fed Chair Powell. And how could they not talk about the 517,000 jobs? How could they not talk about where inflation is? It has been slipping. How could they not talk about 3.4% unemployment? The consumer loading up on credit at 25% if he doesn't pay it off right away. I mean, these are events that I'd like to see done. And what are the pressures that the Fed is looking at, and how do they balance things to get inflation under control without breaking the back of the economy? The beauty is, and there is a beauty to all this, the jobs market is just so darn strong that I can't envision a hard recession. I mean, what would cause it? You'd have to break the back of that jobs market all of a sudden. I'm not saying there's some event out there, but in reality, I mean, there's always an event. It could be a nuclear war. That's not what I'm saying. In a normal event, what's going to change that? I don't see anything. And then as we get out of the cold weather into the spring, you think there's not going to be more demand for service industry people? Think of every outdoor place that brings on staff for the summertime. Think of the camps. Think of everything you can dream of that you do outside, and that's just going to be more pressure on the market. And if interest rates and the recession isn't a deep one, business can withstand that, and that's good. Big companies are still letting people go. Today, Dell, 6,600 people going to be let go, but we know they're going to be gobbled up by the smaller tier companies that are just doing this left and right. So that's where you're at. Another event for the day. I just recorded a special video report on gasoline. And that's because as we get into the spring, summertime, before that happens, gasoline prices typically bottom out and head up. We always watch Gas Buddy all summer long, right? So there's a way to play that if it's going to happen. I don't have a crystal ball. I think it will, but I give you a report on it, how you watch this, things to play, and so on. At any point, you can just click up here, move your cursor, and you'll see an icon. Give it a click. It'll take you right by that report. It's a video report, so I think you'll find that it's interesting. I cover the seasonality of the market, the weekly charts, and then the daily charts, and I cover 2 months with the dailies. So I give you a pretty good picture, I think, as to where we're at. And I'll try to update it as the spring, summer comes along. So the event tomorrow is at 11:30, the Fed chair is going to talk. How do you go into it with the position? That's the difficult thing. You don't know, number one, if he's going to do a cleanup act. You don't know if he's going to add something new. Now that he's seen the jobs data, there's no guessing about it. What is it? David Rubenstein is a great interviewer, so things are going to happen here. Right now, you're in a reaction to the downside in the SPY. You still have a pattern of higher lows, higher highs. You negate that if you get just under the 428 cent area. The support in the market is now above that at 401.84. So if the market wants to fall back to what I call the line in the sand, the neutral number on a chart, the 18-day average, you can do so without breaking through that number. The market is having its problems at the Bollinger Band, which it continues to have. But the trajectory is not sideways just yet. It has been still coming up and making new highs. You see that. You had a bullish crossover 6-7 days ago where the 18-day average in red got over the gray line, the dashed one, at 393.91. Kicking the market to even higher highs as that turned out. And you haven't lost your embedded reading. An embedded reading takes a reading under 79 to lose it. Now, you're going to lose it on the opening. I know you think I'm a magician, but I know it's going to happen. Well, nobody's going to run out tonight and bid this market up dramatically right in front of whatever the Fed chair is going to say. And whenever you close near the low of a day like that and you're just about under 79, you go under 79. But that's intraday. Where's it going to finish is going to be the key to the market, not what it does there. As you and I take a look at LIT, you lost the embedded reading. So because you're under the 200-day when you did it, you're probably going back to the 18 and right here, the 100-day averages. And no, you have stepped out of the uptrend. So this is a market where I think the smart money got out. Again, I wouldn't be surprised if you lose the embedded reading in Apple. I think between the 200-day average right there and the Bollinger Band is a problem area for the market. Generally, that's all I can use the word is generally. The first challenge is after you haven't been to a major moving average in a long time and you get over it, ends with the market pulling back under it. So I'm looking to see that. If you look, you had that event happen back here. We'll see if that happens again. Am I bearish? No. Let me come back to that. I am not telling you to go short. I'm telling you I don't think it's time to be long anymore if you are in there. Now, AMC, smart move. They did something real good. They're going to, after 4 o'clock on certain days, charge you more for the premium seats in the movie theater, whatever they designate those seats. I know where my favorites are. I don't know where yours are. But that's another way to generate a bit of revenue. Please, AMC, listen to me. Any movie that's 2 hours and 15 minutes or whatever, you can divide into 2 sections, get an intermission, get that concession stand going, let people use the bathrooms, they'll come back. You're just going to make more money. This isn't new. This was done 50 years ago, and it works. I mean, I remember the concessions, how they were at that point in time. If you go to an opera, which I have gone, if you go to a concert, sometimes there's a break and the concession stands go crazy. What happens in a basketball game? Oh, I forgot there's a quarter. You ever walked out into an NBA game and see what happens out there as people fill the whole place up, especially halftime? Intermission. Think about it. Okay. XLF, higher highs, but now you're making lower lows. You're still embedded. This is bullish until the red line closes under 79. Now, do I think traders are going to get aggressive in the morning and buying things? I don't. I think everybody's going to sit just like it was another FOMC day, another announcement. And after that, I think they get aggressive. Doesn't mean everybody will do that, but that's what I'd recommend to my client. In XLI, I think people took profit 2 days ago on the first challenge without an embedded reading. Again, you'll hear me talk embedded reading on the slow stochastic. I'm not going to teach it on every one of these that I do. You can backtrack. Our Bollinger Band, Enhanced Bollinger Band course on our website teaches you this. It is a major tool. And right now what you've got is an overbought market. When you hit those numbers and you're overbought, it's where I teach that I think that the slow money's coming out of the market. It is not where I'm saying to go short to catch this break. You won't hear me do that, okay? Not the way that I've been able to prove that works. I've seen where that happens, and then the market stays bid and you lose your shirt. No, I'm looking for high probabilities that I can live with over and over. In SOX, you're flirting with losing the embedded reading, a 78.62. You're not flirting, you lost it. Now, when can you get back that reading? The very next day if you closed over 80 again. Barring that, that's it. What does it mean? It means that before the market gets to 438.10, the odds favor you're going to go wherever the 18-day average is because the other moving averages are even lower than that, so it's the closest one. Now you're into the housing. You closed at 78.58, so long. So as a bull, I'd be telling you, giving you the elbow in the ribs, out, 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 out. You're coming out of these markets. We'll reload later. Let's see what's going to happen. Why go into all this? The energy sector. What's put this energy price down so much? China. The lack of buying. We know that India is bought a lot, but everybody slowed down a little bit right now. Now, the other monster we need, if you want energy prices to explode, you certainly want to see China demanding all they can get, India doing all they can get, we needing more. And we are a strong economy, folks. I mean, even Goldman today came out and said, the odds do not favor in any manner a deep recession if one hits. And it's questionable under what they said today, if we'll get that recession. And that's because labor is just so damn strong. And the stronger it stays, the better you keep doing. And what that does is we're able to see inflation on its own with supply chains and the like, refilling and dropping down the inflation, and people have money. Well, that's the Goldilocks scenario. Whoever thought that was going to be? But that's where you're at. When you come into the gold market, speaking of Goldilocks, no. What broke this market so big in 2 days? The dollar took off because of Fed Chair Powell. His speech sent the dollar up. That was it in a nutshell. Can his speech reverse course on this? It absolutely could. I don't know what he's going to say, how he's going to say it, if he'll backtrack at all, if he'll offer forward guidance. I don't know what he's going to say. This isn't going to be prepared text. It can't be. Not the type of interview David Rubenstein does. So that's not going to be it. Silver, look at how it's fallen apart here. Is it targeting these numbers? It could be. It's very oversold. I certainly wouldn't tell you to press, and I never tell clients to go short under a Bollinger Band or to buy over it. But this is a breakout, and at this point in time, right now, that is a trade top. That's the way to look at that. In the copper market, without Chinese buying, they're half the copper. Bing. Now, the terrible fires that are going on in Chile are nowhere near the copper mines. So that is not a problem for them, even though, it's a tragedy what's going on with the fires there. And what about the tragedy in Turkey, Syria? I understand 3,300 people dead now from these earthquakes, and, number will climb probably a bit more. Homes wasted. My heart goes out when I hear something like that. It's devastating, terrible. TLT. So going into the report, the market peaked out at the 200-day, the upper Bollinger Band. Then the Fed opened their mouth up, the market falls, and you can see what's going on here. I think everybody's scared of tomorrow. The smart people are. You want to see what the Fed says. The algorithms are going to take over the trading just the way that would happen in a press conference or when they make the Fed statement. Expect it, treat it as such, back away from the market, come there to pick up the pieces. You may not want to do what I'm saying, but I think it's solid advice. You're back over the upper Bollinger Band in the dollar. I would never tell you to buy over an upper Bollinger Band. And in FXC, you're down to the lower band. This is where I think the pros are covering their shorts. So you walk away from all that. Now, gasoline. Why did I do a report today on gasoline for you to see? And it's a video report, by the way. So you go in and you get to see the seasonals. I'll show you the 5, the 15, the 30-year bull market years, bear market years, neutral years, longer-term charts weekly, and then the daily charts. You get all that through it. I didn't put in the price counts this time. I could have, but they're confusing. You've got counts to the downside and the upside, and when that happens, I don't like to put them out because it can go either way on you, and I try to lead you into the natural thing. And typically, as you know, and here's what you do know, come the spring, summer months, on the radio as you're driving, what do you hear? Gas Buddy. Gas Buddy says that gasoline just went up 2 cents, 3 cents a gallon this week, or down whatever it's going, right? Well, typically in the spring and summer, you go up in fuel prices. The beauty this year is you're down 50 cents a gallon and going into the spring. That's a lot. The beauty is you just had 517,000 new jobs. That's a lot. The beauty is people are spending money. They're consuming. That's good. Now, the consumer at some point will pull back, but I think that favors gasoline. He's not going to hop on an airplane where the flight prices are total insanity in the spring and summer. He'll drive with the kids, go wherever he's going to go, and away you go from there. How do you get to the report? Click up here. Could I be any simpler? If you're watching this, move your cursor up there. You can go to iraepstein.com, and under the word research, you'll see my gasoline report. I'm Ira. I'll see you tomorrow morning. You have a good day.